The markets are in a really interesting place right now, and I would like to discuss with you, and literally to have this discussion. I do not know where this is going to go, how it's going to end, but this is sort of like market therapy for me, because I want to talk through with you where the markets are right now, and possibly we can come up with some good conclusions, some interesting observations, some tactics and scenarios that we can work with in these markets. I'm calling this the reaccumulation paradox because, well, and I will show you in a minute what that's about, because always when you get into reaccumulation, you have the potential for it also to be distribution. And so we want to go through and look for the subtle clues, the evidence that we are in reaccumulation or whether we're in distribution in these markets. Is there fuel also to propel the stock market higher from here or soon? May not be done yet. We'll look at that. And then which indexes are likely to lead? Hi, my name is Bruce Fraser, and this is Power Charting. So to start, let's look at Dr. Pruden's reaccumulation trading range schematic here on the left. And you can see here that you'll have a large markup phase. This happens constantly in long-term uptrends and also intraday uptrends for that matter, where you'll have a market that will become overheated, overbought, will become climactic, and then will go into a reaccumulation trading range. So we can see here, buying climax, automatic reaction. We know the drill because we are the Wyckoff nation, is that we draw resistance at the buying climax, we draw support at the automatic reaction. It becomes range bound in this area through here and is building a cause for the subsequent next move up. And with that, you see a cause built. We can count this cause with point and figure analysis, and there are attributes of reaccumulation that are different from distribution. We will often see real telltale signs of reaccumulation occurring as the maturation process of this trading range comes to its final conclusion. We're going to talk about that today. I want to just show you here on this chart. Notice the rising gradient of higher lows throughout here, and also the lower highs, which will often occur until you get to the conclusion where you get a sign of strength, jump across the creek, last point of support, which is maybe the most important clue that a new uptrend is beginning. Now, in contrast, let's look at distribution. So here's distribution schematic number one on the right. By the way, you can go look at these blogs. I think September 24th of 2015 is my distribution blog, and you can go look at that also and get these schematics because they are remarkably useful. So same thing, here's the paradox. Notice that in reaccumulation, when you pause an uptrend, you get a buying climax automatic reaction range bound condition. Here, you have the same thing, buying climax, automatic reaction, range bound condition, but this is the beginning of the attributes or the characteristics of distribution as they form. Main difference between these two schematics, and they're not the only two ways that distribution can form, but all distribution has commonalities and characteristics. And we look for the character in these phases A through E, where we look for certain things to happen to define these different phases. So here is the final testing phase in an upthrust after distribution right here. And then here is the last point of supply, which is a lower high in the schematic number 2. Both have the same effective character to them and importance. They just have a different look. Now, the difference with distribution is that the volatility becomes ever greater as you go through the distribution process. Volatility becomes greater, volume and volatility increases on the declines as you go through, in contrast to the reaccumulation here on the left, where we see the volatility generally and very subtly coming out of the reaccumulation area. So we can see that here. This is more of a declining gradient where there's just generally a diminishment of the ability to rally here in the last phase, the last point of supply. Okay, moving on. So, and here, okay, let's shift gears for just a second. I just want to show this to you, let you think about it. I have been fooling around with these two charts. This is gold compared to Bitcoin. Now, there's some big differences between these charts, but notice that they generally tend to have variations or contrast to each other, in that when during the time that Bitcoin was in a very large trading range in the sub 10,000 area, it was actually building a cause. We talk about accumulation, building a cause. It's exactly what was happening here. We've shown point and figures in the past of Bitcoin building this cause for an important move, and we've actually shown how that move was flagged and flagged the high here. And then look at this distribution. This is exactly what we're looking at. This could be an upthrust after distribution, and then a decline, last point of supply, and then it's just a huge breakdown that came very suddenly. Went from above 62,000 down to near 35,000. That was a really dramatic volatile decline. But notice also that the volatility increases here as you're going through. Classic attribute of distribution. So we talked about this in prior episodes, so you can go back and look at those, and I encourage you to really study this market because it's so interesting. Well, notice how gold and Bitcoin are really sort of trading in opposition to each other here, going back to 2019. So as Bitcoin is going sideways, building a cause, little sign of strength, it's much bigger on a vertical chart, and then a last point of support here sets up for a monster rally that's really a tenfold advance pretty much from the lows in Bitcoin. But look, the whole time that Bitcoin is range bound and just going sideways, building a cause, admittedly for a big move, gold is having a huge run up. Then here's our climax, automatic reaction, and then a correction. Now, the scale of these two moves is vastly different, but here is our downtrend in gold. These are, this is GLD as a proxy for gold. And then notice that into the area of the distribution for Bitcoin, gold finally has a climactic low, builds a cause for a rally, and has been rallying as Bitcoin's been declining. I simply want to show you this because you might find this interesting. Maybe I'll put this chart up in a blog, and then you can go ahead and just link into it and have it and follow it. But just an interesting contrast in the way these two very important markets are trading. Now, here's the S&P 500. 4-hour chart, intraday. We've been looking at this chart for a long time. I'm going to extend this out in a minute. But what I really want to show you that's so interesting is that we became overbought, and we actually have been using this chart for a long time, became overbought, threw over the channel, reverse use of trend lines, and here there was this 3 really important attempts to get above and accelerate above the channel line, the demand or the supply line, we would call this, and then it up thrusted this area and then see the volatility start to really come in. So the volatility has been quite important here in this decline in May. But one thing I want to point out is that this market in the S&P, this is through June 2nd, this market has been range bound, potentially reaccumulating since the middle or the second week of April. And so here we have this range bound condition, attempt to rally after becoming oversold here, testing this area, and a rally up. Well, notice that this rally is a rally of poor quality. So this rally has an initial thrust and then starts to just flatten out, has no more oomph, no more really good demands, big volume bar here, which does not propel the index higher. And now it's just going sideways here. Now this is through the second. So is it possible that we're building a cause here for a more important decline? Well, this is why I'm having this discussion with you, because like I said, I really do need to talk this through with you. We love to have these conversations in the classroom, and I wish we could be in the classroom together to do this, but I do get lots of really good feedback from you, and I'm so grateful to you for that. And so here you can see the channel going back to November. So this channel has been really defining the upward trend in the S&P cash since November. Here in April was the beginning of this range bound condition. And now here we are. This is with today's trading, which was kind of an interesting day. But you can see here that we're not that far from the bottom of the channel again. If we were to get through the bottom of this channel, it could become volatile for a more important move. And then this may be a distribution count here. So the key in my mind is you can see this really distinct volatility on this decline here. Very important period here in the second week of May. If we get another decline that is comparable or larger with the same kind of volatility, then I would tend to look at this as being local distribution. Now, again, in the context of 4-hour chart. But here is a point and figure chart. You've seen this in the past. And so we have been using this in our Wyckoff market discussions, and you should come check that out sometime. We do free episodes on Wednesday afternoons on occasion, and we would love to have you there. So here you can see this yellow shaded area creates a large count, 21 columns, 146.16 points of upward potential. It actually fulfilled that count around 42.10, and then there's an upward count of 42.31. Well, actually, see, this is through May 26. We actually have gotten up to that 42.30 area, but there's a larger count here, and this larger count goes 42.80. So it's possible that we could go over the top of this range. This is that range bound condition that we just evaluated here. So we could go above that and then potentially come back in. Or the other thing that would be real exciting is that this whole area becomes countable. But until we get out of this trading range area that we've been in for a long time now, range bound condition, we have to look at the potential for reaccumulation and distribution. And a point I want to make about that is that this is often the situation with comparing reaccumulation and distribution, is that it's not always clear to the end which you're in. And I'm going to show you an example of that in a minute. Here's the Russell 2000 IWM ETF. 2 reaccumulation pauses since the March COVID low of 2020. You can see here a beautiful reaccumulation with an upward stride to it, higher lows and higher highs throughout, resolves itself. Look at it grind up into important overhead resistance, and this shows really good demand for these stocks. I call them small cap value stocks, and so they are in a position here to start to have a really good rally. Well, look at this new reaccumulation, which goes back literally to early February. So range bound condition. The thing I'd like to point out, here's the upward stride. We have broken the upward stride here in this area, but look at the tails that we have in the weekly. This is weekly bars, and you can see the tails, which shows that there are good bids around the area of support. Very interesting. Russell 2000 has been in a relative strength decline since 2018 and even before that. So you can see, as defined by this red downward arrow, that there's been underperformance. Institutions will tend to stay away when you have long-term underperformance on a relative strength basis of a stock or an index to the S&P in this case, which is my default. I look at that all the time. Notice here, really strong advance, really good advance in the relative strength since October, completing a relative strength base. Well, now we're pulling back. First important pullback, really, and then we are to the long-term moving average. So this long-term moving average is very close to being touched. I often look at this or use it as a point to start to add to or build positions in the instrument that I'm trading here. So that would be the case with IWM. Now let's zoom into the daily. So here we're getting into the reaccumulation versus distribution paradox. And so you can see, I'm going to move. I have a little thing here you can't see that I'm moving out of the way so I can see my notes. Building a cause. Is this a last point of supply? This is the part I really want to talk out with you. Is this a last point of supply, or is this going to result in a sign of strength? This is not a sign of strength yet. It's just run up to the resistances defined by the buying climax all the way back in February. Look at how this is so important. Look at this beautiful buying climax, gaps, acceleration of the trend, and then exhaustion, very large decline. The most important decline in the Russell going back to September of last year. So range bound state, lower highs throughout, but also higher lows. Remember, that's one of the characteristics of our reaccumulation structure. So this is very encouraging. Now, what about the volatility? Volatility in this decline is high. The volatility in this decline is, I would argue, even higher because it declines precipitously, quickly, and on very high volume. So still range bound. Now an attempt to secondary test, touches the resistance line again. Absolutely beautiful. This decline's important because it is diminished in the extent. It takes longer to do it than this one. So that's a small but important clue. And also notice the volume into the ultimate lows. The volume comes right on the low couple of days where it gets close to the upward trending channel, the demand line, and then it starts to rally. So that really high volume, even though there's supply in there, there's really good demand that's able to produce a low and then a rally. Well, so far this rally is not great, but it's persistent. And here's the important thing. There is supply over the top. That's the reason that we have a range bound state, is because there's supply in here, and the supply is being absorbed, we would say, by the composite operator as he prepares for another advance. So what we would need to see is a rally and a backup that would suggest that we have a sign of strength and an inability to be able to decline again. I think this is constructive. And so we will look at this now. Here is a point and figure. Remember the running Reaccumulation we just looked at, well, I just took a quick count of that. Look at this, 200 to 218 went right into the middle of that zone where our range-bound state has formed. And now here, now this may be unfinished. It may grow larger. We think that there's a good chance it's reaccumulation. It's acting like it so far. This so far generates a count 268, 280 could become larger. And so we would expect this trend to continue, and actually look at how it's accelerating. So normal reaccumulations along the way are what we expect in a good uptrend. Now let's look at the Qs for a minute. And so I hope this is helping you as much as it's helping me, because reaccumulations are periods of have attributes of vagueness in them. And also the other thing is that you can have reaccumulation in one market, distribution in another market. Here is the Nasdaq 100 Triple Q ETF. And so very important index. Look at this range bound condition here. This range bound condition is from September, buying climax. We documented it at the time. We documented the buying climax and the trading range. Well, this area here, look at the hinge type action, lower highs, higher lows, range bound all the way into late November. And then something really important happens in early November is that you have an important jump. Look at this jump. Notice how dynamic this rally phase is compared to the prior one. Each one of these declines is smaller and less volatile with less volume than the prior, which is a classic attribute of reaccumulation. So we have this really great jump with gaps to the top of the hinge, and then a consolidation, a tight little consolidation at the hinge with diminishing volume as it's going sideways. This oftentimes is all the evidence that we get of absorption at the end conclusion of reaccumulation, the beginning of an important uptrend. And we did have a very important uptrend here. So another buying climax, huge reaction. This reaction is every bit as large as this one. And then a range bound state through here, preliminary supply. Now, it's possible that we could argue the automatic reaction should be at this low. This is the secondary test. This would be something we would talk about in the classroom. Notice this attempt to test, automatic reaction test, run up. This is up thrusting the highs here. Very high volume on this first decline, pretty high volume in here, which says that there's some supply, even as it's going up. Pretty dynamic advance until it gets up to resistance, and then a pullback. Now, higher lows throughout. That's a big check mark for the reaccumulation process versus distribution. So we ask the question here on this pullback, is this rally a last point of supply, which is a distributional characteristic? Well, notice that the volume is diminishing on the advance up into this area, and it can't get to resistance yet. Not that it won't get there, but this is where we are through the third, the day I'm recording this, excuse me. And so you can see that we're attempting to get up to resistance. We're not there. So then today there was an attempt to pivot down. The volume is not particularly high. I don't think today was that bad of a day. So what we would really be looking for would be the volatility increasing on the way down as it attempts to get to support here or here. And that would tell us that distribution, there is supply present. So I don't expect that. I always defer to the upward trend. So we would put more weight to the reaccumulation process, but this would be the thing that we would see to confirm that distribution is at work here. So I would say this yellow box, this area here is what we'd want to see next, which is a real dramatic demand-oriented advance with gaps in it potentially, and then an inability to correct again, but to go sideways. We would call that a backup a jump and a backup, which might look something like this. So this would be a sign of strength. This would be a shallow backup. Volume, look at the volume real low over here back in November. Volume would be real low here. Sorry for all the markings here, but that is sort of the idea. Also notice relative strength here is quite weak. The Nasdaq 100 is underperforming the S&P here. Okay, here's some point figure counts. I'll let you look at these. I'm running out of time. Here is a count that goes up to 14.2 to 14.256, and then a larger count up to 15,000. So if we were able to get that good jump in here, now this is through June 1st, but if we were to get that good jump that was able to take out these highs over here, notice how well this distribution count worked, is that then we would have a condition where maybe something like this happens and then it goes again. So we will be watching for that. Here is the triple Qs on a weekly basis. And so I'll let you study this, but notice the overbought condition in 2020, overbought condition here again and again. And then riding along this trend line here, this could become potentially important resistance. And so this is the reason we're really being vigilant about watching for the introduction of volatility off of this area, because this would start to make this look, more vulnerable. And also I want to point out this relative strength study, because you can see going all the way back to 2016, relative strength has been clearly dominant for the Nasdaq 100 growth stocks, mega cap growths. And now you can see that there's what looks like a distributional type character with a breakdown of the long-term moving average. And now we're below these important support areas. So it needs to get back in gear and get going again, which it can do. And but this is, I think, a warning. Here is the Nasdaq comp. This is kind of a trading thing, so I'll give this to you really quickly. And that is that you can see this is a 2-hour chart, and this is the Nasdaq advancers minus decliners 5-period moving average. That's the blue line. And so what I look for trading purposes, and this is in the green box, is I look for a higher low on the test. Now here, this is higher also, so it's not a divergence, but it's still a really terrific signal. Here's a higher low here on the lower low in the market, and here is a slightly higher low here. And so this becomes a good trading situation. But notice what's happening now. Oftentimes the overbought condition comes and the decline of this indicator just goes straight down as the final highs are being put in. This was a classic distributional structure. Here is what we're potentially looking at as a last point of supply. Notice how this is really turned down. So we would now need to see an oversold low and a higher low to indicate that this wants to put in a good bottom and then start to rally again. So here's really going to be our final charts. Semiconductor ETF, you can see here, throw over, look at this big range bound condition on the weekly chart here, and now it's flirting with the bottom of the channel. And so it's range bound. Semiconductors are so interesting because there's real winners and losers here in the index. But look at this long-term uptrend in the relative strength. It's back down to the rising long-term moving average as it approaches the oversold condition of the trend channel. This could be an interesting place to be trading semiconductors, but you're really going to have to pick them here because it's not a market that has lots of winners. It's sort of a mixed bag. So, okay. And so we're out of time here. I'll leave this chart for you to look at and we'll come back to it next week. And with that, thanks so much for being here and we'll see you next time.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.